Thank you everyone so much for being here tonight. My name is Mindy Zacharias. I'm the program director here at Fels Institute of Government, and we are so excited to kick off another another season of our public policy and practice speaker series. I'm just going to give some quick housekeeping announcements while folks continue to come in from the waiting room, and then we'll turn it over. The first half of our event is going to be an interview with our distinguished fellow Elizabeth Vale and Mary Ellen Iskenderian, and then the second half will be question and answer. If you have questions for the Q&A, you can send them to me by direct message in Zoom, and then I'll unmute people to ask their questions, and I'll prompt you to do that. When you send your question, also please include your name and your affiliation with tonight's event. So if you're a student, an alum, a community member, basically how you found out about tonight's event. I think that's it for me. So I'm going to go ahead and turn it over to Elizabeth and Mary Ellen. Thanks so much.
Great. Thank you, Mindy. And thank you, Colleen and John and Lauren and all the wonderful students at Fels. Welcome, welcome. And most especially welcome to Mary Ellen Iskenderian, who is a dear friend of mine and a tremendously accomplished professional who changes the world and has changed the world since '06 when she's been president and CEO here of Women's World Banking. So welcome, Mary Ellen.
Thank you, Elizabeth.
So much for being here. And your new book is so exciting, and we will talk about that. Anyway, Women's World Banking is one of the oldest microfinance groups in the world. It is 45 years old and one of the largest as well. It works with 63 financial service providers in 35 countries, which together serve almost 160 million women. Quite remarkable, incredible, really. And Mary Ellen has been here, as I said, since '06. Before that, she worked at the IFC, International Finance Corporation, which is the private sector arm of the World Bank. Before that, at Lehman Brothers in investment banking. That's an interesting switch there. And you're also a permanent member of the Council on Foreign Relations, a member of the Women's Forum of New York, the UN Business and Sustainable Development Commission, and now you're also on the board of the Hewlett Foundation. Mary Ellen has an MBA from Yale, a bachelor's from Georgetown, the SAIS School, and was recently recognized in the Forbes 50 over 50. You're over 50.
I am, as hard as it may be to believe.
The investment list, which is pretty amazing, which highlights female investors and financial leaders. And the first book, which is fabulous, There's Nothing Micro About a Billion Women Making Finance Work for Women, was just published last year. And Mary Ellen, thank you. You kindly gave us 100 copies of it, signed individually to our students. So students, you are very lucky. It is a fabulous page turner. So it is. No, it's spellbinding. So with that, let me start with my questions. And as Mindy said, I get the first half hour, and the students and others get the second half hour, and their questions are usually way better. So we'll just get through mine quickly. But I always like to start with, tell us a little bit about the origins of you and really who and what may have really inspired you to get on this amazing path you're on.
Thank you for that question, and thanks so much for having me back. I remember being with you just before COVID kind of changed our lives.
Yes.
It's great to be
Well,
back.
you're here by great acclaim and request, so I'm glad you came.
Excellent. So my family does not like that this is what I think of as my origin story, but my father is from, or was, he's unfortunately no longer with us, but was from Istanbul, Turkey, and we would go back and visit my family and relatives there during the summer. And Turkey was a much less affluent, well-off country during the 70s and late 60s when we were visiting. And I just had this very, very vivid memory of seeing, children my age and my brothers and sisters' age, playing on the street and kind of wondering, like, where were their parents and why weren't they in school and what were they doing there? But what kind of mattered even more to me in a way is that my father's family just kind of walked past them or drove past them, and this seemed to take it for granted that this poverty was existing alongside their relatively comfortable lives. And it just really bothered me as a young child and then as a teenager. And I just sort of remember promising myself that I wasn't going to be somebody who just walked by.
Wow, that's really moving, brings tears. Fascinating. So you started off, as I mentioned, in your career at Lehman, private sector, and then Bank of America, or one.
Yeah, Bank of America was first, yeah.
And then Lehman. And did that teach you immediately you didn't want to do that, or did it teach you good things that you could apply later here?
So Bank of America, I was a foreign exchange trader for 3 years before I went back to business school, and that taught me invaluable swearing skills. So I think that's really important in any finance career, no matter what element you take. With Lehman, I really, again, I kind of have a come to Jesus moment. It's almost that it literally kind of split the world, one from the next, because I remember having this real view that finance could be a force for good in people's lives. And I had been very fortunate and worked on a bunch of really interesting transactions. I somehow got staffed on a lot of privatization transactions when, Greece was privatizing all of its government-owned facilities, and Spain had just come out of the Franco era. And I worked on a bunch of bank privatizations and really fascinating transactions of seeing what, a market-driven financial institution could do for people. And so I was pretty idealistic about what you could accomplish with finance. And the first deal that I got to work on at Lehman, where I was not the most junior person on the team, where I got to have an analyst working for me, was an advisory assignment that the firm had been hired to do, where it was a trucking company that was looking for acquisition candidates. And they had been very clear, they wanted it to be in a southern right to work state. They were unionized in the north. They didn't want to be unionized in the south. We'd identified a bunch of possible candidates. And I remember meeting with the analyst a couple days before we were going to go visit the company and propose a couple of different merger candidates. And I'm looking at his model and I'm seeing sort of a plug figure at the bottom of all of his pro forma balance sheets. And I said, "What are you using as the plug?" And he said, "Those are the layoffs that would be necessary for each deal to work." And looking back on it, I was probably pretty naive that I was this far along in an investment banking career not to have realized it. But it just wasn't what I wanted to be doing. And by just an amazing coincidence, like literally the next month, I happened to be staffed on a deal with a woman who had run the Young Professionals program at the World Bank prior to joining Lehman. And, one night over Chinese food at 11 o'clock, I was sort of telling her my tale of woe. And she said, the bank is no longer just hiring PhDs from, around the world. They're looking for people with more sort of market-based experience. Why don't you give it a try? And I was very fortunate because Americans tend not to get in. My father was convinced it was because I was willing to take the largest cut in salary in order to take the job. So, but I was thrilled that I got into the World Bank and kind of never looked back.
And you spent 17 years.
Yeah, I was there a long time.
What did you do in shorthand?
Well, I think the biggest kind of combination of things that I did over the longest period of time is dating myself here. A few months after I joined the bank, the Berlin Wall came down. And so pretty much for the next 10 years, I worked in initially Eastern Europe and then the former Soviet Union, just really building financial systems. In the case of Europe, kind of rebuilding. And, they were in the Czech Republic and Hungary and Poland, they were always bringing these, 82-year-old lawyers who had done securities law back before communism and had some vague memory. But then in Russia and the former Soviet Union, it was really, whole cloth and inventing securities regulations, putting new financial institutions. And it really was the time I got to see that, people who had only seen financial institutions as instruments of the state, maybe where they could keep their money or, they didn't see it as a factor in their lives, now became really convinced that a bank could be a partner in helping them build a business or realize dreams or purchase a house. So it was, and I pretty much stayed in the financial services part of the bank for most of my
Mhm.
career.
And then you came here, which is
Yeah,
amazing,
yeah.
and you probably didn't realize when you were doing it at the World Bank that all of those skills were directly relevant to what you would be doing here. I mean, you didn't plan that, I assume, it just happened then how did you find your way here?
Yeah, it's interesting, there were some very, very relevant skills, some that I really had no clue about. I had just been feeling over the last couple of years I was at the bank that I was feeling sort of farther and farther away from the people that I had joined the World Bank group to try to serve, and was sort of found myself managing up, lots of time working with the board, letting my people really do the interesting stuff and working with the people on the ground. And I had done a fair amount of microfinance transactions in Eastern Europe, and then in Latin America, you started to see some of the more commercially market-based financial institutions. The IFC started taking very big stakes in some of those organizations, and I was really convinced about that model. So when Headhunter called and it looked interesting, I had a great series of interviews with the board and joined. I think the financial advisory skills, helping financial institutions move to the next point in their development, that was very relevant. What I hadn't really had much practice at was, leading an organization, managing payroll and making sure that, everybody got paid, everybody was working, that we were able to attract good talent and retain talent, because there had been a pretty significant leadership transition. My predecessor had been with the organization quite a long time. So learning how to run something was very new and very exciting. And I'm so grateful that the staff was as patient with me as they were.
Wow, that's a big jump, big challenge, yeah. So you talk a lot about, in the book and just in general, about financial inclusion. And I wonder, why is that so important, not only for the women and your clients, but also for the institutions, the financial institutions? How does it benefit both of them?
Yeah, it's a great question. Yeah, it's a kind of a wonky term, financial inclusion, but it really means being brought into the formal economy in a very, very real sense. We find that, so many women entrepreneurs and individual women, sort of sole proprietors are working in the informal economy. And very often the very first thing that they will go and get a formal ID, and they'll make that leap into formality is to open a savings account, because they want a safe place to save their money. And then sort of once they've established a sense of trust and a sense of being a client and a valued client, then they're kind of on their way, and credit is open to them. We find that women are much more likely to buy cross-sold products. So, if they're a savings account client, they're going to buy an insurance product as well. And so that kind of gets into the second part of your question. Women are very good clients of financial service providers. They tend to be very loyal. I've seen research that says 60% of women are likely to be in both more affluent as well as lower income strata, are more likely to be clients of your financial institutions after 5 years than a man is.
Wow.
And so engaging with them, building products that meet their needs and are relevant to them and are sold in a way that's relevant to them is really good business for financial service providers.
Fabulous. So you've written this very cool book, which again, I recommend highly, highly. What do you hope the book will do? And, do you think it might convince folks, yes, we need this in other places, or, do you think it will fuel growth? I mean, what is your mission here?
Well, I certainly hope so. I think, there's a lot of audience still to be reached with the book, but my intention was really twofold, was to make the point that so often when I start talking about what I do, just in a random conversation, people say, oh, microfinance. And it is really not sufficient for us to be just giving very small, very high interest rate loans to women. They need all of the financial products and services, and they need them ideally delivered through a smartphone.
Mhm.
So they need that digital technology as well in order to be really a part of the economy and to contribute in the way that we know that they can. So I was really trying to make that case for the women. But then the second part of the book is really more about the business case and why it is in the interest of financial service providers. Oliver Wyman has an estimate of $700 billion of annual revenue that the financial service industry is leaving on the table because men and women aren't being served at parity. And that's not even getting into inclusion. That's saying even existing women are not getting home loans or personal loans or insurance at the same rate that men have access to those things.
Yeah. Huh. Well, and then there's demographics. I mean, we tend to live 7 years longer, which means you've got the money at the end of the day, right?
Exactly.
And you are the client. Fascinating. So, tell us a few stories. Stories are always very memorable, very engaging about women you've helped, or one or two that you just will never forget what an impact you made.
So the story that I like to tell, because I think it kind of gets to this sense of women being visible and that money being a form of voice, was a bank in Paraguay had hired women's role banking to come down and help them increase the percentage of women in their agricultural loan portfolio. They had it's largely an agricultural economy. They had a lot of growth in that portfolio, but not so much about women. So they brought us down. We went out and started visiting a lot of their male clients and getting a sense of what their businesses were like and how we might need to change the product to reach women. And I didn't go on all of the interviews, but I went on one, and it was really very in my mind today. So we got to this house, this farmhouse, and this woman sort of did not meet our eyes and was looking down at the floor, but led us into her home. We walked through the home, back out to the garden where you could see the soybean fields that her husband was farming. He was a very good client of the bank. He took us on a tour of his field, but we kept seeing, chickens and a little kitchen garden, and there was clearly like another little business going on in the on the property. And so then we came back into the house, and again, Maria, his wife, kind of again, not meeting our eye, served us all a cool drink. And I asked about, well, whose garden is that? Whose cows and chickens is that? And the husband was a little dismissive, and he's like, oh, that's Maria's business. And as we got to talking, she stayed in the room with us. It kind of emerged that she would go to a weekly farmer's market. She sold every single tomato, egg, salsa, everything that she brought to the market. Sold everything. And she volunteered that she knew she could sell more if she were able to expand the business. And when we started sort of looking at the family's, business and personal income, it was very clear that 70% of the household income, sort of week in, week out, was being met by Maria's revenue.
Wow.
So
that is so amazing. And he was still dismissive.
Right. And Manuel, had the two harvests. Lots of money would come in twice a year. But what was really interesting being there with the bank, the bankers realized that, he had a spotless repayment record, but it was probably Maria who was paying the loan.
So interesting.
And that was such a powerful lesson for me. So we all go, back to the capital city, and we designed what we ended up calling a sidecar loan. So women like Maria, who were numerous, could borrow sort of to meet their business needs, their cash flow needs, regardless of what the husband might be doing in the farm. And it turned out to be a super success. Within a really short period of time, the bank had gone from 12% to 40% of their portfolio in agriculture being these loans to women. But I was so fortunate because I got to go back.
Oh wow!
After
and see her,
the project.
And she's not divorced him. No,
not at all. No, even a better outcome, because it was almost like, a from a movie. We knocked on the door, she opened it, met us right with the eye, come back, come back, come back. She wanted to show us the cow and the extra chickens and the more planting space that Manuel had agreed that she could have. And she was literally transformed.
Wow,
And
how
she
cool
told
is
us
that?
how much she had
Empowering.
grown
So
her
empowering.
business. And then when we said, what was the most empowering piece of this, what really mattered most, and it was an immediate answer from her that she was viewed differently by him, and that he recognized her,
her
he
value.
recognized her value,
Yeah.
he saw her and
Yeah.
her business really for the first time,
Yeah.
and that has
Yeah.
always stayed with me.
Yeah, I mean, you must have had to learn how to navigate those sorts of dynamics between, men and women, particularly in the third world where maybe they are a little bit behind us in the way of being, enlightened. But money speaks, I mean,
Yeah.
bottom line to his, to the family, well, that's exciting. And she'd probably then be a role model for all kinds of other peers,
women,
yeah.
exactly.
Very, very exciting. I mean, that must feel so good. I mean, you just immediately leave footprints. So now you are an investor too.
Yeah.
And a shareholder. So how did you get into that? What's that about? Tell us about that.
Well, I think I may not have admitted it at the time, but when I joined Women's World Banking, we were just an NGO. We provided technical assistance and capacity building to financial institutions around the world to make their products more friendly to women. But I had come from an investing background. My time at IFC had always been about, driving capital into businesses that would serve underserved people. And so it just became so clear to me that we needed to take a step in this direction. And then my amazing team, unbeknownst to me, had been doing some research. They looked at 39 microfinance institutions that had made the transition from being themselves nonprofits or charities and becoming regulated institutions. And we found that within 4 years of a decision to move from nonprofit to regulated, the percentage of women who were served by those institutions went from an average of 86% to 59%. And if there had been a woman CEO or a woman board chair at the organization before, they were gone. And in fact, women's leadership had pretty much been erased at all of those organizations. And that to me felt like a real invitation to be the investor of capital that supported that client base with that group of leaders. And thankfully, my board agreed with me. And so we raised our first fund.
When was this?
In 2012 was our first fund. And we invested in 12 more or less microfinance institutions. There were a couple of, one organization in Jordan that focused more slightly higher level, small and medium-sized enterprises, but sort of well-established organizations that were making that transition. And our objective, and in fact, we even tied part, not all, but part of our carried interest to achieving, a continued focus on women clients and with continued women's leadership with those organizations. We had on average an 86% increase in women clients from the time that we took the investment to date, particularly given what the trajectory had been. And we held the line on women's leadership, which was very exciting. We raised a second fund. I still think if our investors knew that the pandemic was going to be as bad as it was, we closed our first 75 million of the second fund March 27th or something, 2020. So right after lockdown, right. And then we were able to raise, another 28. So that's at 103 million. I think that fund's a little bit more exciting. We're investing in a bunch of fintechs. We have an affordable housing company. We have 2 companies, one in India, one working throughout sub-Saharan Africa, that are really focused on women's mobility, selling EVs and other, 2-wheeler vehicles to rural women so that they can improve their ability to to get out and about. There's a very close correlation between mobility and empowerment. So really sort of different group of companies, but very exciting ones.
Wow, this is so, how do you sleep at night? It's so exhilarating. So you mentioned what's empowering. I mean, I know technology is hugely empowering and you've discovered that, and I read that interestingly in the book about cell phones, that cell phone usage is just key.
Absolutely.
So how do you encourage that? How do you grow that for people?
Well, it's probably one of the few silver linings of COVID,
Mhm.
because we saw so many countries
Mhm.
had by that point digitized government payments, and so COVID relief payments were made digitally to
Oh,
cell phones.
oh, interesting.
And so even countries like, India, for example, which has some really
Mhm.
strict social norms around particularly married women
Mhm.
having cell phones in their own name, because India was also very smart. The first round of COVID relief payments were paid only to women, only digitally.
Why?
And
Why only to women?
well, because they were
That's
smart and
amazing.
they knew that the payment
Went to
were
the
made to
family.
women, it would go to more people in the family.
That's shocking that they got that.
Yeah, and within like literally a matter of weeks, 25 million new bank accounts were opened, primarily by.
That must have really annoyed the men. No?
Well, again, it's like if it's the only way you're gonna get
Yeah.
the payment
You'll
into
be
the
happy.
family, we can
That is really surprising
make it happen.
that they got it.
Yeah.
Huh, what do you know? Well, that's exciting. So, you have a new emphasis on gender and regulation. I mean, how are you training regulators? How do you nudge regulators to really incorporate sort of a prism or, a prism of women looking through, the differences that women need?
I think we got lucky a little bit in our timing. The Sustainable Development Goals, when they were first created, there were 7 SDGs that explicitly stated that financial inclusion would be an enabler to the achievement.
Mhm.
As you may know, in the last several months, there's been sort of a stock taking. We're halfway through the SDGs. We're falling very far behind in achieving them, and they've revised the enablers. So today, financial inclusion is an enabler of 13 of the 17 goals. And so countries around the world who are committed to achievement under the goals have really started to make financial inclusion a priority. The vast majority of developing countries now have explicit national financial inclusion strategies. And the smart ones, not all of them, but the smart ones recognize they have to have specific gender targets or they're not going to achieve the overall goal. The things that they're doing to include men may not be sufficient to including women. And we've become a real trusted resource. We've done a lot of work on the national strategies in Mexico and Indonesia, India, Nigeria. If we get those 4 countries have nearly half of the non-included population around the world. I think we're really making an impact in the places that we need to.
So you're in 35 countries, but not the US.
Ah.
Why are you not here? Could you ever be here? I mean, is it not a problem here?
It is very much a problem here, and my dearest hope. It's hard. It's harder than I had expected to pull this project together, but is that our 3rd fund will be actually investing in companies that can enhance women's economic participation. So financial service companies, but there's a booming care economy, companies that are investing in this care deficit that women.
Care, how do you define that?
Child care,
Okay.
elder care. Women have that, you know this, women have that 3rd shift where they're expected to make up that additional care burden. We saw it very clearly during COVID. And now there are some very interesting business models that are addressing some of those care issues. Workforce training, financial wellness, employee wellness. So we're eager to invest in this country because from the pay gap is such a driver of other kinds of inequality, not least the difference in wealth creation. All women own about 40% of the wealth that men do. But as soon as you add ethnicity or race into that equation, it falls to,
it's worse.
really, really disturbing levels of, you know, Black women
Yeah.
having 12% of wealth, Hispanic women having 8% of the wealth of white men. And so much of that is around home ownership, you know, access to financial securities, savings account, other assets. So those are all issues that we are very, very familiar with from the emerging economies that we're eager to bring to the United States.
Well, and as you say, COVID really highlighted that, you know, women are the linchpin of the economy, and they, you know, they really had to quit, most of them, to care for people. And I would also think you get great PR from in this country from we're looking after women, we're looking after those who are, you know, less able to.
I would hope so. I mean, you could argue that there has been a bit of a backlash against women. DEI initiatives are, you know, sort of on everybody's chopping block. So I would hope so. In fact, I was with the CEO of Nationwide Insurance today, and unprompted, he was just telling us stories of how they're having to rethink the products they offer for the reasons that you alluded to, that well over 50% of their client base, the woman is the one that's left at the end of the day with those retirement assets that have been accumulated over time. She has far less understanding about where the money is, how it's been invested, and is then likely to live several more years. How does she make sure that those, you know, that those resources are stewarded well?
Interesting. So last question for me, and then you all get next half hour. So you're this big CEO.
Oh, yes.
And of a big company, actually. When I think of your reach, 159 million basically clients that your providers serve. What's your day like? I mean, what's your pie like? And so, you know, what percent roughly would you spend on X, Y, and Z as a CEO? And what is your favorite part?
Okay. So about, I guess it's 2 years now. 2 years ago, we did a bit of a reorg because I realized I have amazing people working at just the level below, and they don't need me messing around in their day-to-day operations. But then again, they need coaching, they need guidance. And so I wanted my interaction with them to be more, you know, less of the getting in the weeds of their work, getting in the way, but helping to lift them up, taking burdens off of them that I could, and supporting them. So I think my day-to-day engagement has become a smaller piece of that pie. Fundraising, we are a nonprofit organization, and on the investment side, I'm capital raising or spending time with investors. That has become a much bigger part of the pie. And then I think supporting both of those things, I do a lot of speaking. The book was a great opportunity to sort of get out and get the message.
And travel, you must travel.
I do travel quite a bit.
Like half your day, half your year, what?
I'd say, well, I'm usually away 2 weeks out of every month. The summers get to be a little bit, I get to stay home a little bit more. But certainly in the winter, spring, and fall, I'm on the road a lot.
Yeah.
One of our big changes during COVID was we moved all client-facing staff to the markets we're working in. So New York is just, you know, is finance, some fundraising, you know, the sort of expensive overhead that's, you know, that's me. But the people really working with the banks, working with the women are in those markets.
Digression slightly, but is the move to virtual work, you know, ex-US a similar thing? I mean, it's so common, you know, it's sort of 3 days a week in the office here. Do you find it overseas?
It's a really interesting question. I'm finding my staff much more eager to be together in a workspace. And it was interesting since so many of them, because we're up to 100 staff now around the world. So many of them joined us over COVID when, you know, they had to be virtual. The first thing you know, we're in Indonesia, Singapore, India, Nigeria, Kenya, everybody wanted, can we get space? Can we have co-working space? Can we get together? So I think it's less, so Elizabeth and I are sitting in our office in New York that is beautiful, but is not very populated most days of the week.
Fascinating, yeah, that's interesting. I was just curious if it was similar overseas. Okay, Mindy, we're gonna bring you in, and you can get to navigate these questions for us.
Thanks so much. We've got a great queue of questions coming in. Just a reminder that folks can send any to me by direct message, and then I'll queue folks up. So our first question is from Joshua Anker, who is a full-time MPA student here at Fels. Go ahead, Joshua.
Yeah. Hey, Elizabeth. Hey, Mary Ellen. This is fantastic, especially hearing the large-scale perspective that you have on everything. And I think that you mentioned those sidecar loans when you were talking about Maria. What other interesting, innovative things have you in the bank kind of just stumbled upon that the people who are in that position really didn't think about? Wow, this could be a business. It was almost like a no-brainer to you guys.
Oh, I love that question. And it's like the minute you said it, I know exactly what I was gonna tell you about. So, I alluded to India having been so farsighted about, the digital payments to women. There may be, many issues we may have with the government there, but they have been extraordinarily farsighted about financial inclusion. And they've put very deliberate building blocks in place to bring as many people as possible into the formal digital financial system. And one of those building blocks was a sort of no frills bank account called the Jan Dhan. It has a very long name in Hindi, but the Jan Dhan account is the shorthand. And pretty much everybody in the country was eligible for one. I read somewhere that the day that they went live, they, broke the Guinness Book of World Records for most bank accounts opened on a single day. It was very, very popular. But within a very short period of time, they went very dormant. And in fact, you saw 55% of the accounts that were held by women were dormant. Women were not seeing value in their lives to having these accounts. So one of the largest state-owned banks in India, Bank of Baroda, brought us in to help them figure out how to turn these dormancies around. And after talking particularly to women, but this was an issue for, it was 55% of the accounts for women, it was 40% for men. So it was still a very high dormancy number, and they were expensive. Those accounts, I think it was, if I'm remembering correctly, it cost something like $7 a day to keep one of these accounts open if it wasn't being used. So we found that a lot of the reason why people wanted to save was in the hope of one day being able to borrow. And so we designed a product that if you committed, we didn't care about the amount, we didn't care about the time, but if you committed to making 6 deposits over the time you told us you would become eligible for an emergency line of credit of about $100 to $120, depending on how much you had deposited. This thing is blowing out the window. It is so popular. And what was really interesting, and to answer the question you specifically asked that we hadn't seen coming, is the bank had retained and really had a sort of diversity initiative and was trying to bring more women into the, sort of the agent relationship, the client-facing relationship. We saw a huge difference in the women agents, both with men and women. They had a higher sign-up rate. They had higher rates of conversion from sign-up to account. The accounts that were opened tended, again, both men and women tended to have higher balances. They had better repayment rates if the emergency loan was taken, and they were better at cross-selling that insurance product that the bank then added on when they saw how popular these accounts were. So what's now become a big business for us is training these women agents, and we've got several big projects going right now with various banks in India, as well as some government agencies to boost women's participation in the financial sector. And probably our biggest policy win has been the RBI, the Central Bank of India, had set that by 2030 they wanted 10% of the workforce in the financial sector to be women. And we were just so blown away by our results that we lobbied and got that target raised to 30%.
Oh my God, that's triple.
Yeah, isn't that great? So
isn't that exciting? God.
Yeah. So it was the women and their performance that turned out to be the no-brainer that we hadn't, duh, we should have been more, we should have been more astute about it.
I mean, we do like men, we do like men,
we do.
we don't mean to, yeah.
Well, no, but the male clients, that was really interesting. And Joshua, you can tell me if this is the way guys really think. The men told us, I'd rather ask a stupid question of a woman than let a man know that I don't know how to use the cell phone, or I don't know how to calculate compound interest or whatever, that they felt more comfortable talking to a
that's so
woman agent, which
nice.
was really interesting.
Great. Thank you so much.
You muted, you muted. I'm sure you're gonna do this, right?
Sorry about that. We do have a bunch of great questions, so I will move on to the next one. But our next question is from Meg Turner, who is an MPA student here at Fels. Go ahead, Meg.
Hi. What skills would you recommend a student develop if they want to work with an organization like Women's World Banking in the future?
So I guess the tricky part of that question is organization like Women's World Banking, because I think the one of the reasons we have success is that we really can talk the banker's language, and we are very much about, oh, I like the cat in the picture. We're very much about not making these women clients charity cases, or, you know, some percentage of your corporate social responsibility has to be women. We really want it to be a viable business. And so, you know, I have a lot of sort of recovering bankers on my staff. So I think, you know, a really firm understanding of how finance work, how, you know, how banks, insurance companies, fintechs, how they make money is really essential. But then I think, you know, a certain amount of empathy is just so critical, because I think one of the things that we do very well is listen to women and then take what we've heard and make sure that it's invested and inculcated in the product design. And so sort of empathetic bankers, I guess, are really the skill set.
And creativity.
And oh, absolutely.
To match what's needed.
Right.
Great. Thanks so much. Our next question we have from Alex Blankenstock, who is a former colleague of Elizabeth and a former guest in our career day. So we're very happy to have
wow.
Very nice to see you again, Mary Ellen.
Hi.
I really enjoyed your book and found it to be an outstanding primer on finance in the developing world in general, even beyond the aspect specific to women. I learned a ton from it.
I know you're writing a book too, so that's great to hear.
Perhaps I'm revealing how naive I am, but one thing in the book that really surprised me was how much more responsibility married women in the developing world seem to take for saving for their household and for providing for the children in that household than their husbands tend to do. The experiment from Kenya that you cited in your book about the differential ways men and women use money when they receive a windfall underscored this very vividly. Can you tell us all more about this dynamic and share why you think this is the reality?
So, you know, it's not, in many cases, it's not as nefarious as it might, as you could, ascribe. That very often there is just sort of a division of labor between a husband and wife, between, I'll save so that I can invest in the business. Husband, woman says, I'll save so that, the school fees get paid and the household expenses are met. I think we've come to understand that happens in healthy households.
In life.
It just does seem very often that in moments of crisis, in moments of, important choices, the woman is going to choose whatever she has to do to make sure that she can pay that school fee at the end of the year. Very interesting research came out of the World Bank this year that, the number one reason women want that cell phone and want to understand how to use it for financial services is to pay school fees. And we never kind of heard that linkage with the phone before. But I think what we've become a lot more intent on and really focused on is if that woman does have resources that she controls, that are in her name, that she's responsible for, that absolutely leads to her having more say in household decision making. So when decisions on how the money is going to be allocated and what is going to be prioritized this month or next month, if she's got some money that's her own and that she's got control over, she's going to be much more likely to have that power. And so that's one of the things that we work really hard on, is making sure that there is an element of control for her.
Great, thank you. Okay, our next question is going to be from Brandon Parrish, who is a member of our executive MPA program at Fels. Go ahead, Brandon.
Guys, how you doing?
Hi, Brandon.
So I had two questions. So my first question was, what initially caused you to think that finance could be a force for good, and how do you feel about the current state of the financial sector, their ability to continue to be a force for good? And my other question was, you talked about your organization bringing women into the formal economy. Can you give us a picture of what the informal economy looks like?
Yeah, no, it's both great questions. I think that idea of, it's so interesting you asked the question, Brandon. The first sort of external person outside of my family that read my manuscript asked exactly the same question. It's like, you keep making this point, but what made you think that? So good question. I think, I know that the impact of having money in my own name, I know what choices that allowed me to make, and was so conscious of being able to choose career paths, choose, to delay getting married, to, all sorts of choices that I had almost exclusively because I was earning money in my own name, controlling money in my own name. I knew what a difference it could make in people's lives because I knew the difference it could make in mine. And I think that some of that comes from, from my mother and my grandmother and their own perceptions of having money under your own control. My my mother unfortunately passed away several years before my father, and when we knew she was going to be dying, she kind of took him through the checkbook management, and she would write a check every month, sometimes pretty sizable, to this thing or this person called HC. And finally, my father was like, "Who the heck is this HC?" And that was what she called hidden cash. So she was, secreting money away. So I think I kind of grew up with this sense of money gives you choices,
Yeah.
and wanting other people to have those choices as well. The informal economy is, it's funny, we talk about it as if it's this kind of shadow thing. It is the vast majority of people in the world are living in that, but it's unregistered businesses. It's, businesses where there's probably, a single individual who's, selling fruit on the side of the road. It's a business that is certainly, covering the costs, or at least helping to make ends meet in a family, but it's not formalized. There may not be formal accounts. A lot of people measure the first time that a business kind of makes the first step into formality, when there is that separation between, the personal money and the business money, and that there isn't just one till that gets taken out, money gets taken out for both. But it's, overwhelmingly women are in that informal sector. And we saw during COVID that it was really hurt women, in the sense that so many governments made so much money available as business support loans. Yes, there were, relief payments made to families, but there were also payments made to businesses. And, I've seen the World Bank make estimates of, hundreds of millions of dollars of relief to small businesses that women didn't have access to because their businesses were all just completely below the radar.
Gotcha. Okay. There was one part of my question I think you missed. There was the current state of the financial sector.
Right, so forgive me. I don't know, so it depends on the day you get me, I suppose, to some degree. I had a call today, I'm speaking at a panel on Monday, and we had a little prep session. And, I heard about an affordable housing finance company in this country. And home ownership is the lack of it is so much at the center of poverty in this country. It is so much at the center of building asset ownership. In our own portfolio, we have an investment in an affordable housing company in India, where the title to the property that's being financed must be in the woman's name.
Wow.
And that's very often like the first asset that she actually has ownership of. And one of the things we very quickly saw is that the company wasn't doing enough to explain to the woman like what this means and how this changes her life by having that asset. So I think there are parts of it, there are some maybe green shoots, where I think we learned a lot of really, in fact, some incredible professors at Penn doing some really great work, some really terrible lessons that we learned coming out of the financial crisis about, essentially banks continuing to redline or use, the old redlining maps to write subprime mortgages that were overwhelmingly disproportionately written to Black women who in many cases could have afforded regular mortgages at regular interest rates, but were definitely discriminated against in that way. So there are parts of it that I think we are learning from. I do think who knows how the student debt issue will settle out, but with more women graduating university now than men, they do hold well above the majority of student debt. And with the pay gap, which starts to show up even in professional careers within 3 years, and again, women of color are much more severely impacted by that earnings gap. It takes women, a third longer to repay that debt. I've talked to women entrepreneurs in this country who just find themselves, really eager to start a business, but they're so saddled with that student debt. So I'm hopeful that we will come to, as a country, we will come to a solution on that. I don't know if it's the financial sector that's going to get us there or the government is going to get us there, but I'm hopeful that there are some of the biggest problems that we're grappling with here in the US. Internationally, fintech is just revolutionizing the way access to finance is being made because data is becoming, democratized. We're working on a project with the Central Bank of Rwanda where only 5% of the population of women in Rwanda are even accounted for in the credit bureau, but upwards of 75–80% of women have cell phone and mobile money data. And so the central bank is trying to incorporate mobile money data now into the credit bureaus so that more information can be made, more decisions can be made for them about their credit worthiness, about giving them access to finance. So I'm quite hopeful internationally, and I just hope our country can catch, or our financial system can catch up.
I mean, we have made headway. I'm thinking back to my first credit card. I don't think I could have gotten it without my husband co-signing it. Yeah, and minorities, I'm sure were discriminated against. So yeah, I'm not that old. I mean, that was probably 1975 or something. So, or no, 1980 maybe even, 1980. Yeah, so we've come a long way.
No, this is true.
From a bad base, yeah.
This is true.
Thank you so much. I'm gonna jump in. I think we
Whoops, we
Oops,
lost
did we
you.
lose you?
We might have lost Mindy. I'm
Here,
gonna
oh,
jump
here.
in for Mindy. Diara Pavez Gamboa is next with the question. Okay, let me ask you to unmute. It's a little tag team tonight.
Okay, thank you.
There you go.
Hi, Mary Ellen. Hi, Elizabeth. Thank you so much, Marilyn, for having this time. And I think I just have to say this because I don't know if it's a coincidence or what, but I also come from an economics background, and all my research has been based in women's presence in the informal economy in Peru, my home country. So I'm very familiar with all your work, and learning about women's world banking is just very impressive. It's like something touching, is inspirational. So thank you so much for that.
Oh, thank you very much.
And my question is, which were the main challenges what you faced when you were funding women's world banking?
Just repeat that last piece. I heard the biggest challenges and then
Time, I want to see if
Yes, perfect. So which were the main challenges which were the main challenges you faced when you funded women's world banking?
So I should say that I'm not the founder. I'm actually the third president. But I think, I think I've been very fortunate that I joined just at the time, like I joined within a month of M-Pesa. I don't know if you're familiar with that, the first real digital financial service, because it just has revolutionized the ability to get finance to that last mile at a price point that makes it affordable for the financial institution. And I think, my predecessors, didn't have that benefit of technology, if you will. So I think I got to sort of surmount that barrier. On the other hand, we were a very, very microfinance focused organization when I came in, and microfinance was very slow to recognize the opportunity and in some cases the competition that they face from technology. And so just sounding that, that alarm bell and making sure that women didn't get left behind, that microfinance moved into the digital era, that we needed to work with a broader set of partners. That turned out to be a bigger, not a barrier so much, but I didn't think it was an argument I was going to have to make. And I found myself, having to convince a lot of people, a lot of our stakeholders that that was a good way to go. And I'm pleased that we went in that direction.
It's a great student.
Yeah.
That's just so wonderful.
Okay, so, and we have, I think, time for one more question. Leslyn Diaz. Perfect. Let me ask you to unmute. Oh,
Hi, am I audible?
Hi.
Hi. It was great being a fly on the wall in this conversation, especially because I have generated a lot of accounts for women back in India, especially with Bank of Baroda. So this feels like a full circle for me to be part of this conversation at whatever capacity. My question for you was, women, more so mothers, are never usually allowed to co-sign loans, especially for their children's education. As someone who's tried to get a student loan without a co-signer, I have faced this problem. Now, the program that you're lobbying for in India, does it account for this? And a follow-up question on that would be, what observations have you made between marital status and employment for women?
Very, very good question. Baroda has been really very farsighted. I think, frankly, as a state-owned bank, they've got 15% market share on that Don account that I was talking about. They have a, real commercial and policy mandate to make sure that that women are included. So happily, we have not seen that. We've now also taken the product to two other Indian banks, Indian Bank and Union Bank of India. Union Bank of India has a woman CEO, and she's, oh my gosh, she's a force of nature and just has very, very ambitious goals. So we're very fortunate, at least on this product that I described, the savings linked credit product, have not had a problem. But the issue you mentioned about marital state, I think when we look at around the world, the barriers to women's economic participation, economic empowerment. There's just too often in too many countries, laws that discriminate against women around their marital state. They can't get, I just heard that in Yemen, a woman cannot get a passport in her own name. She has to be on her husband's passport. There, in many countries, a woman cannot apply for a birth certificate for her child. Her husband has to. So there's this deep interlinked legal set of barriers that are marital and family status, and we're just not going to be able to move forward. And I know those are all deeply rooted in culture, but if we could take the legal discrimination away, and it might still be there, and just because you change the law doesn't mean that you change the culture, but you can certainly move in the right direction. And I've just seen too many cases where, in Rwanda, for example, the first parliament that had after the genocide that required women to have equal representation, they removed the prohibition of women inheriting land. And within less than a decade, you saw land ownership by women just skyrocket. So removing that legal barrier, while the cultural one may still be there, makes an enormous difference.
Wonderful. I think that's sadly the end of their much better questions than
They were pretty good.
But I think if y'all have any more questions, please send them to me and we will answer them. And I think we all want to interview to work with you. I mean, talk about leaving footprints. How inspiring. Thank you so much.
Thank you.
Now I always get the last question, which is, can you tell, these are mostly 25-year-olds, wish I were 25, but in any case, most of our students are about that. Can you tell us 2 or 3 things you wish you could have told your 25-year-old self when you were 25?
Oh, that's a great question. I think really for me is like, have confidence in your convictions. I knew what I wanted to do. I think I was very swayed by, when I left Lehman Brothers to go to the World Bank, my parents, couldn't believe I was leaving this high-paid positions. And oh my God, when I left the bank to come run what turned out to be actually not a particularly well-funded nonprofit when I got here, they couldn't believe that I was making something. And I moved from Washington to New York, much more expensive city. They really thought this was a terrible decision, but just sort of stick to what your conviction says to you. Listen to that inner voice. I really think I questioned myself more than I should have at that age.
Well, and also, part for me and many is, what is my conviction? It took me till 54 to figure out what I really wanted to be. And you found that early, and or doors opened and you knew to go through them.
I think that's, well, and I that story of the plug figure sounds kind of glib, but it really was, oh wow,
those are people.
Yeah, those are people. That's not what I'm here to do.
Yeah.
And I think I think
to
listen to that. Listen
yeah.
to that.
Yeah. Fabulous. Well, we could listen to you for a long time, but thank you from all of us.
Yeah, thank you so much.
Oh,
Wonderful.
thank you,
Joining
Colleen
us.
and Mindy. Thanks so much.
Yeah, and if anybody has other questions, I know you do out there, we have to stop, but send them to me and we will get them answered.
Yeah. No, and
Perfect.
particularly if you do get a chance to
Yes.
to read through the book and have questions, I'm available through
Yes.
Elizabeth. I'm on LinkedIn.
Yes,
Please.
and do read the book. The book is well worth reading. So thank you for the.
Thank you so much. Thank
beautiful
you.
copies.
Thank
All
you.
right, take care.
Good night.
Bye.
Night.